Over the 10 years that I was chairman or ranking member of the Finance Committee, I worked with several Budget Committee chairmen. They were Senator Domenici, Senator Nichols, Senator Gregg, Senator Conrad. We did not always agree on every issue, but by and large, there was coordination between the Budget Committee and the Finance Committee. Basically, I had past chairmen, Republican or Democrat, come to me and say, tell us what you can do or not do within the Finance Committee so we don't give you an impossible task when a budget resolution is adopted by the United States Senate. And it worked very well because they respected the institutionalized knowledge within the staff of the Senate Finance Committee, both Republican and Democrat staffs, as well as the more important institutionalized information that comes from the Joint Committee on Taxation. Now, as I said, we didn't always agree on every issue, but by and large, there was that coordination. Unfortunately, the coordination receded somewhat starting in the year 2007, and since 2010, we fell into this four-year pattern of not even having a budget debate in the United States Senate, even though the law requires that the Senate adopt a budget every year. Finally, getting back to abiding by the law. Coordination provided the means then between the Budget and Finance Committee that allowed the Finance Committee to realistically address the demands of the tax, trade, health, and welfare policies that were intended by a budget resolution. Now, this usually happened in a bipartisan way, but this year is different. This budget resolution does not realistically address the needs or the capabilities of the Finance Committee. And by capabilities, I don't mean that it's not there to get done and people willing to do it, but the possibility of doing it is very remote based upon the unrealistic assumptions in this document. Despite claims to the contrary, this budget is not balanced unless you believe balance is more of the same fiscal behavior of the last 4 years of the Senate Democratic leadership fiscal policy. That policy has resulted in higher taxes, higher spending, and yet higher debt. Where there is fiscal pressure, it is placed on the Finance Committee by this document now before the United States Senate. The Finance Committee is called on to do all of the heavy lifting. The principal lift is in the heavy tax increases. The Finance Committee is reconciled under this document with an almost $1 trillion tax increase. Reserve funds, in addition to that $1 trillion, reserve funds anticipate another $500 billion in tax hikes to pay for even more spending. The task put on the Finance Committee is described as curtailing or eliminating what is called, quote unquote, spending through the tax code and, quote unquote, loopholes. But if you look at the document, and particularly if you look at recent history, you'll find a different story that says what they assume is not really very realistic. You'll find tax increases. I want to explain that. But first, I'll account for revenue raisers the majority party has specified and supported with votes in this Congress and the last one. And what those votes show, unless there's a big change of heart on the other side of the aisle, there's not going to be that revenue ever raised. So that makes the document on the other side, if it's not possible, blue smoke and great hope and good luck. Now, What this is going to tell us is that the unspecified and undefined tax increases in the budget resolution is seeking. Once we have the undefined tax increases, I'm going to then define that. I'll define it by taking the universe of tax-based broadeners and working through the list to explain to you the unreality. I'll be able to show you one of two conclusions. The first conclusion I can show you, the math doesn't work and there aren't sufficient revenue raisers to fill the revenue goal of my friends on the other side of the aisle. Or two, the budget resolution would need to go much further down the income scale and do what you just heard Senator Roberts say: start taxing middle-income taxpayers. But that's going to be hard to get them to admit that on the other side, because, you know, all you got to do is tax the wealthy 1%, and you can solve all of our problems. But you can not only tax that 1%, you could confiscate, not tax, but confiscate the income over $200,000, and you're going to run the government for just a very few months. But, you know, people tend to believe that. It's very difficult to preach the other side, that how unrealistic it is, but that's a fact. Now, all of us should take a careful look at the claims of the Democratic leadership and see how the claims stack up to the cold, hard numbers that I'll give you and the analysis by the tax writing committee staff. So let's turn to those numbers. Over the 10-year budget window going out to the year 2023, the budget resolution demands revenue and related outlays savings of $975 billion. There are two reserve funds, as I already said, that total up to about $580 billion in tax increases if that's tapped. And around here, with the willingness to spend they want to spend, you know, they wouldn't mind tapping it. But I think that's unrealistic as well. So I'm going to show you this chart here. The first chart is a well, a water well, right here. Here's the top of the well, right here. And you can see it's a long well to the bottom. And there's a little bit of water in the bottom. But most of the well from this point to the top is dry right now. And that's what they have to fill by their budget resolution. At the top of the well, you'll see this number. The $1 trillion plus that is in the reserve, to raise money for the reserve fund. That's what it takes to go from here to fill it. If you want to put this another way, this budget puts the burden on the Finance Committee to come up with $1.5 trillion in offsets over the next 10 years. This budget assumes the well of revenue raisers is full to the brim, right here. But they're starting out at this point. My colleagues know that I am a farmer. I should say my son is a farmer. I'm kind of like a hired man now. But I think that gives me something to know about wells and the predictability of well water. And we on the farm always hope that you'll get rain. And particularly now, as it's dry in the Middle West now, you get a decent level of water so you can fill up the well to the top. Got plenty of reserve. And as a former chairman and ranking member of the Finance Committee, then I think I can tell you something about revenue raisers. In the positions that I had on the Finance Committee, I led efforts to identify and enact sensible revenue raisers aimed at closing the tax gap and shutting down tax shelters. And as senior tax writing committee member, I continue to look for ways to shut off the unintended tax benefits. Now, given this experience, I know what is realistic when it comes to revenue raisers. From 2001 through 2006, Congress enacted over 100 offsets with a combined total of not necessarily a lot of money, but still a lot of money compared to this stuff we're talking about here, but it still scored for $1.7 billion over 1 year, over 5 years, $51.5 billion, and over 10 years, $157 billion. Now that's from about 100 offsets. What other revenue raisers have been identified and scored? The President's last budget, the one we got February 2012, they're supposed to be out here every February, and we aren't going to get it until April the 8th now. Why, I don't know. But the President's budget 2012 contained a package of a lot of revenue that the Joint Committee on Taxation said would raise $1.4 trillion over 10 years. The majority party has largely left these revenue-raising proposals untouched over the last 4 years. So if you got a Democrat president of the United States suggesting $1.4 trillion of revenue in his budget as a suggestion from the White House, and the other side here in the United States Senate wants to raise a tremendous amount of revenue, and they haven't touched it in the last 4 years, what makes you think they're going to touch it now? So is it realistic to think that all of these taxes will be raised if even the Democrat president asked for it and his friends on the other side of the aisle, our friends as well, ignored it? The majority party has, however, identified and specified and voted for tax hikes that amount to $108.3 billion. That $108.3 billion of identified and scored revenue raisers, that's only about 7.8% of the amount that's needed to make this budget work. So see how unrealistic this budget resolution is. Based on these facts, what's the likelihood that the Finance Committee will be able to come up with revenue raisers of this magnitude? In my view, from my 10 years as chairman or ranking member, that chance is not very high. If that's the case, then what will happen? The revenue side of the budget will be ignored, but the spending side will be followed. The net effect will be a massive tax increase, a bigger deficit, or both. Now, back to the chart. So if the revenue raising well is about 7.8% right here, we've heard a lot about tax expenditures. As I've said before, the people have been told that there's trillions of spending through the tax code. I'm going to look at the individual income tax expenditures because the administration and the Democratic leadership has said they want to leave the corporate tax expenditures for lowering rates. So here's a little irony. The Congressional Budget Act defines refundable tax credits as spending. It makes all the sense in the world because the tax benefits go to individuals who don't pay income tax. These credits are actually paid out in the form of a check in excess of any income tax liability of that individual. However, you won't hear the majority advocate reducing, let alone eliminating, any of those refundable tax credits. In fact, the majority's budget would increase them further. They represent then even more significant tax expenditures. So I have another chart here based on the nonpartisan Joint Committee on Taxation data. So here are 10 tax expenditures. The chart shows the top 10 individual income tax expenditures from this year 2013 through the year 2017. These top 10 expenditures represent 70% of the total individual tax expenditures. Number 7 here is the Earned Income Tax Credit. That is a refundable tax credit designed for low-income taxpayers. Number 8 on the list, I won't bother to point to it, but number 8 on the list is the premium tax credit enacted by Obamacare. By 2017, this credit will actually make its way into the top 5. Like the Earned Income Credit, the premium credit is fully refundable. Number 9 on the chart is a child tax credit, which is partially refundable. For each of these credits, more than half of the value of the benefit is paid out in the form of a government check exceeding tax liabilities. That is direct spending through the tax code. Yet these credits are considered off-limit by the majority. So let's take a look at the tax expenditure number 1. That's the tax-free treatment of employer-provided health care. Americans can look forward to a $1 trillion of health care-related taxes coming due over the next 10 years. All of this tax increase is thanks to 21 tax increases contained in Obamacare. My guess is the majority doesn't want to take on that group. So number 2, that's tax-deferred retirement savings vehicles. It's defined benefit plans and Section 401k type plans. To be sure, some higher income taxpayers benefit. Defined benefit plans tend to dominate in the unionized world. Section 401k type plans are more common now. Some high income taxpayers do in fact benefit because they are owners of a business, and we want them to set up and maintain their plans. About 4% of this tax expenditure goes to taxpayers at $1 million or more income. Number 3 on the list there, it's the preferential rate for capital gains and dividends. It's true that higher income taxpayers tend to have more capital gains, but a few months ago, the rate rose 59% with the Obamacare and fiscal cliff deal tax hikes kicking in. Do we want to choke off more savings and investment? Number 4, that's the deduction for state and local income and real property taxes. The New York Times editorial page is usually very in tune with the majority. An editorial, December 6, 2012, has a title that says it all: Keep the state tax deduction. My guess is that with heavy hit on the heavily taxed blue state taxpayers, the majority will not want to visit that deduction. Number 5 concerns the American dream of home ownership. It's the home mortgage interest deduction. It disproportionately goes to the middle-income taxpayer. Do we really want to tank the tepid housing recovery now underway? And so look at number 6. It's the tax benefit from Medicare benefits that the federal government pays. We've heard a lot about the Medicare reforms contained in the Ryan budget from the majority. Does the majority want to cut the value of Medicare benefits by taxing them? I've already discussed 7, 8, and 9 on the chart, which are all refundable credits. They're Earned Income Tax Credit, Premium Tax Credit, and Child Tax Credit. Significantly, the premium credit makes the list while only being in effect 4 out of the 5 years that we've examined. So how about the last one then, number 10? It refers to the stepped-up basis that occurs on death-time transfers. Higher-end taxpayers tend to pay the estate tax when they die. This policy ensures that they don't pay a double tax on the transfer. So, does the majority really want to reopen the estate tax debate that we all thought had just been ended on January the 1st? Now, if we were to expand on this list and look at the top 20 expenditures instead of just the top 10, we would account for 90% of the individual tax expenditures. They include such things as charitable deductions, tax incentive for colleges, and the exclusion of capital gains from the sale of a home. Does the majority want to raise taxes on the backs of college students or cause heartburn for middle-income homeowners when they sell their home? Well, let's take a step back for a minute. Where does the budget take us? The terms of the budget documents tell us. The majority members say that they want to eliminate or curtail spending through the tax code, $1 trillion plus another $500 billion if they decide how to spend it. Yet they themselves would vehemently oppose eliminating or reducing tax expenditures that are defined by budget law as spending. So I challenge the budget authors to tell me which tax benefits they want to curtail. Do they want to cut back the tax treatment of employer-provided health insurance? Do they want to cut back defined benefit plans or 401k plans? Do they want to increase capital gains and dividend rates even further than the 59%? Do they want to cut back on state and local tax deduction? Do they want to cut back on the mortgage interest deduction? Do they want to tax Medicare benefits? Do they want to raise the tax level on death time transfers? Well, I conclude this. This budget represents a dramatic step backward for the American taxpayer. For the first time in 4 years, thank God, we're debating a budget. Yet it repeats the same fiscal pattern of the first term of this presidency. It spends too much, it taxes too much, and it results in too much new debt. As former chairman and ranking member, and I suppose this is the fourth or fifth time I've said this, so you get tired of my saying it, but in that former position, I'm sorry to say that the experience I've had, that this budget doesn't even attempt to mesh the demands of the Finance Committee with the numbers in this budget. So I hope deficit hawks on both sides of the aisle pay close attention. The only thing certain here is that new spending will occur. The deficit impact of not realistically dealing with the tax, trade, and health policy spending priorities of the Finance Committee disguises the deficit built into this budget. I have many other concerns about the budget proposed by the majority. So simply today, I wanted to let the Senate know how the numbers on the revenue side don't work from the standpoint of the usual stands that people take on closing loopholes and not closing loopholes, and based upon what's politically feasible out of the Finance Committee. As we take up amendments, I'm hopeful that we can make this budget mesh with the Finance Committee's policy demands. I yield the floor.